Hey guys, Chris Snook. Thank you for reading the book, and hopefully you really enjoyed this last chapter called "The Light at the End of the Tunnel." Well, throughout this book, we've talked about the mindset to making over your life and getting wealthy. We've talked about the tactics and the specific things in this economy that you need to do to create ongoing passive cash flows. But what we haven't really dove into is the importance of credit. And we haven't done that for a lot of reasons. There's a lot of noise out there as far as what should you do if you're in the middle of a short sale, if you bought 5, 10, 15 investment properties and now you're upside down on half of them, or maybe you walked away from a couple of them and you're not really sure if you'll ever be able to buy again. Maybe you don't even care at this point. Maybe you're negative in the emotions around it. But listen, it would be incomplete for me to finish this book without a chapter on that, because when I was going through my bankruptcy, which I never thought I'd have to do, I had a different mindset than I think most people had. And a lot of it had to do with the people I was listening to and the books that I was reading, and they were from people that were millionaires and billionaires at the time. And so my perspective on what I was going through was a lot different than I think the mass market, and it really helped me, and it served me. And it's why we're here today, 3 years later, like we never got hit at all. So I want to introduce you to Eric Phillips. He's a good friend of mine. We office in the same building together. He's got a phenomenal law firm. But Eric, I just want you to tell them, what should they be thinking about right now if they are in the middle of this? How important is their credit? And what are a handful of items that they need to watch out for or miss? Whatever you can dispel for the folks.
Well, just kind of very quickly to put it in a nutshell, the biggest myths are, well, first of all, before I even get into the myths, the bottom line of FICO scoring is the scoring matrix is designed to determine if you're heading towards bankruptcy. So what that translates to is the more recent the negative, the more damaging to the score. So the first thing I advise people to do is get a copy of a credit report. You can go to annualcreditreport.com, download a credit report, and analyze it. And what you're looking for is any activity within the last 24 months. Anything beyond the 24 months really doesn't have an impact to the score. And of course, the other side of that is you always want to make sure that you maintain all payments in a current status. Pay as agreed, because you're going to get credit for that. The other big factor, the two biggest scoring components in the FICO matrix are, one, how you pay your bills as long as you pay them on time, and secondly, what's called the utilization rate. You have a $1,000 line of credit. Typically, if you exceed 35% of your available credit, it begins to drop your credit score, because the matrix interprets that you may be heading towards default, and the warning signal that FICO sends is the dropping of the score. So as we kind of move on from there, what most people don't realize is a credit bureau is just a broker of information. A credit bureau just does what it's told to do. And it doesn't respond to consumers because it doesn't have a relationship with consumers. A credit bureau's relationships are with the paying subscribers, subscribers being banks, mortgage companies, credit card holders, etc. So our philosophy here for the 34 years that we've been doing commercial and consumer credit is we really don't deal with the credit bureaus. We actually deal directly with the creditors themselves, explain whatever the circumstance is. For example, there's a lot of payments online. Typically, account numbers are 2 digits or inverted. There's some kind of an error. And if the computer doesn't post a payment, it gives you a 30-day late. So you're at least able to go back in, contact your creditor, which is going to drop your score immediately because, again, the perception is you're defaulting your credit, and the warning signal is the dropping of the score. So you want to contact your creditor directly, explain your circumstance, and have them issue you a document. Everything on this side of the business has to be documented. Don't accept their word for it, and the key word is deleted. So contact your creditor, here's the circumstance, here's what happened, but I need it in writing. And even though a creditor will tell you that they'll correspond with the credit bureau and they'll make the corrections, I believe in getting that document and having our client also submit as well, just to make sure it gets corrected.
So you're doing some work for me, and you've done some work for us, and yes. we had BMW Financial didn't count 19 payments that I made after the thing, right, and this kind of stuff. So a lot of these folks, that are reading this are maybe they were wealthy, maybe they're millionaires, and they had a bigger net worth, and they were, middle class millionaires.
Sure. We've all been through that.
But a lot of this information is good, but what if they're dealing with a firm, like your law firm? You deal with it from a legal perspective, and there's a whole rights issue around what you're doing. But what should they look for when they're hiring a firm? If they're looking at one of these like monthly, 49, whatever these deals are, that how do they know what's good and bad?
Well, unfortunately, the industry is filled with a lot of companies that claim to remove tax liens, that claim to remove bankruptcies, so on and so forth. And I want to just dispel a couple of myths that are basically out there. Number one, there's no legitimate way to remove a bankruptcy. However, the government does give us a program that allows us to change and recategorize the information. There is no such thing as a short sale credit rating. It's either collateral sold or settlement accepted, and the interpretation from the credit bureaus with that is that it's a defaulted loan. My point is you have to consult with a professional that understands this.
Right.
And when you see these claims that people say we can remove tax liens and we can remove bankruptcies, et cetera, it's $49 a month and $49. All they're doing is writing challenge letters to the credit bureau.
Which the person could do.
Which a person could do on his own. But the problem with that method is credit reporting is done in a monthly disc, for example, for lack of a better term.
Right.
So if in the law says that if you challenge the information and there's not a response within 30 days, the negative information has to come off, which conceptually is a wonderful idea. Here's the problem. You challenge in September, there's no verification, it comes off in October, it's going to reappear the following month as soon as that disc is resubmitted for whatever that monthly activity is. Whether we posted payments or we didn't post a payment, the point is that activity is going to be reported and the information is going to reappear. So it's a completely ineffective technique. So what I suggest people do is, find a professional, preferably a lawyer, preferably a law firm where we're held to a higher standard. We have to disclose the truth. Sometimes the truth isn't always the easiest to accept because we all want to hear, oh, I'm just going to write a letter and have it wiped out. That doesn't mean that there aren't programs available that we can implement on behalf of the consumer and restore his credit.
Great. Hey guys, listen, this is some valuable information. It's just the tip of the iceberg. Fill in the information below if you want to be kept in touch with updates and newsletters on the world of credit. Credit is one of your biggest assets. Whether you're ever going to use it again or not, don't think that it's not. And be willing to pay for the right advice. Don't be cheap when it comes to that. If you're not going to do anything about it, don't do anything about it. But if you are going to do something about it, find a professional, pay what it costs to fix it, because trust me, the expense of not having it fixed and operating from a worse or Alt-A, which doesn't even exist anymore, credit rating, is costing you hundreds of thousands of dollars in the future. So thanks for tuning in, and we'll talk to you later. Thanks, Eric.
Thank you.
Appreciate it.
All right, thank you.